defense tech represents about 10% of total US defense market cap, but they only represent about 3% of total defense sales. That being said, they trade at a 3 to 4 turn on an EV to sales basis premium to the primes. So we think it will take about a decade or so in order to grow into those multiples at about a 10 to 20% growth rate. So I think the question becomes, can defense tech grow at that mid-teens clip? And in short, without getting into the weeds of it, I think our answer is yes, particularly because many of these companies are aligned along some of the fastest growing pieces of the budget and within defense more broadly. So think hypersonics, UAS, counter-UAS, cyber, AI, et cetera, what have you. So in short, I think that mid-teens growth is feasible. And then turning to the primes, as it stands today on a valuation basis, they're trading at a minor premium to industrials. So we think that price is in kind of low single-digit flattish growth just from a budget support perspective as it stands today. And we think those companies, the primes, will continue to remain best positioned to manufacture the larger platforms, just given that's where the capacity and intellectual property is today. So I think to your question about market share dynamics, we think it's an and kind of not or scenario where this big uptick in the procurement budget, which is pretty much the largest we've seen since the Reagan era, is enough to kind of support both groups moving forward.